Good morning, you're watching Business World Live. I'm Danny Laurel. It's the start of a new trading week. Let's kick off with our top story. We kick off the trading week with some outlook on the banking sector. S&P Global Ratings expects bank lending to remain sluggish in the second quarter, with improvements likely to happen in the second half of the year. Analyst Nikita Anand told Business World that credit demand will primarily depend on the lifting of restrictions in Metro Manila and the nearby provinces. Protocols in NCR and nearby provinces have eased into what the government calls GCQ, with heightened restrictions until the end of the month. As reported, infections have gone down. Bank lending has declined for the third straight month in February. That's despite the Bangko Central's move to infuse liquidity worth 2 trillion pesos into the financial system. The financial institutions group also believes that lending will likely remain muted in the next few months before picking up pace later this year. Analyst Joyce Ong says banks will remain cautious on lending to MSMEs and retail borrowers due to their elevated default risk. This forecast comes after the Bangko Central reported a continued increase in non-performing loans in the real estate and household consumption sectors. The NPL ratio for real estate loans almost tripled to 4.6% in 2020. That's from 1.7% in 2019, while the soured loans more than doubled to 9.3% for 4.1% from 4.1% in 2019. Okay, guys, let's open the market reports with a quick check on the banks. A big slide early in the trading minute. That's down by 0.9%. The drag, of course, by our biggest two bankers or lenders there, BDO and BPI, dragging down the rest of that sector. PNB, however, up by 1.2%. Recall that they were heavily sold off last week following that earnings report. Now, let's take a quick peek at our own opening. Still above 6,000 levels here, 6,200 levels, and that is down by 0.9%. But of course, this is still a better performance than what we had seen mostly in Friday. We had reached a low of 6,080 last week, but then this decline, you can see that inching up its way towards the end of the trading day, was erased. That was as the government, of course, announced the GCQ status for the NCR Plus for the remainder of the day. And another good thing that we did see happening last Friday, take a look at that. The first sole green bar in 30 sessions at the first net foreign buying in 30 sessions. We'll see whether that holds true for today as well. This according to Mike Ricafort of RCBC. Investors will be keeping a close watch on the COVID-19 cases. Recently, we've seen the lowest in 1 to 2 months. We've mostly hovered between 4,000 to 6,000 levels. Quick check on the malls here. This, of course, as retailers are saying that the so-called proposed vaccine pass is still premature. This according to the Philippine Retailers Association President Rosemary Ong. It's premature to have these vaccine passes. This is discriminatory, especially for those who are not yet vaccinated due to lack or supply or just access. And she said this is counterproductive. Also, the Department of Health is in opposition of this so-called vaccine pass. This from Undersecretary Rosario Verger. She said there is no sufficient evidence actually to point out that anyone who is fully vaccinated would be immune from the virus and able to block its transmission. This follows, of course, Presidential Advisor for Entrepreneurship Joey Concepcion saying last Saturday the use of vaccine passes may be considered in NCR Plus once we achieve herd immunity, possibly by the end of the year. Now, just a very quick check on the rest of the world here, just to show that the rest of Wall Street had performed quite stellar in Friday's trade. You can also see Europe staging a recovery there, but it's not the same case for Asia Pacific. It's still quite mixed, and we see that open a little bit softer. The Nikkei 225 down by 0.2 8%. Taiwan's TAIEX quite heavily down by 2%. Now, Asia has seen the worst stock slump in over a year. We are lagging the global peers for a fourth month. The MSCI Asia Pacific down by 3.2% just last week. And we are on track for the worst monthly performance since 2020 of March. Now, what is happening in Asia? Of course, another outbreak here from Taiwan and Singapore. And as I mentioned, the TAIEX down by 2% already. Singapore already saw its stock market plunging by 3.2% just on Friday. That's as they announced that they will be returning to the lockdown-like conditions that it imposed a year ago. And of course, you've got India, Japan, other parts of Southeast Asia battling fresh surges in coronavirus cases. Now, here to chat with us about all of these developments and the stocks to watch, we have with us Regina Capital's Bea Lopez. Good morning, Bea, and welcome back.
Good morning. Thank you for having me.
Bea, quick check on our levels here. We had dangerously treaded towards the 6,000 levels last week, and finally, some bargain hunters swooped in. Can you say that that is actually a strong support level, or there's still some risks to the downside after these announcements of the GCQ with heightened restrictions, of course, and the NCR plus, and all of these economic data, having been digested last week?
Well, it is indeed that the 6,000 level is an important support to watch out for. And what we've noticed over the past few weeks is that investors are a bit more cautious in moving during the early hours of trading day and are just waiting for around the runoff period just to ensure that they are actually picking up at attractive prices. The announcement of GCQ was a positive surprise since as we see, we have already the new variant here in the country, which actually can pose a threat to the GCQ imposition here in NCR. And moving forward, I think that the investors have already priced in the impact of the pandemic on future economic data releases. So the future releases would not have as drastic of an impact on market movement.
Bea, why the sudden net foreign buying on Friday, and will this be sustainable?
Well, if you look at how net foreign activity has performed in the past, it's evident that there is a bit of a struggle in sustaining the net foreign buying status, which is, I believe, it's because of how well the other countries are performing and handling the pandemic in relation to here in the Philippines. Several countries have already started returning to the pre-pandemic levels in terms of mobility and the reopening of the economy. And if you compare it with how the Philippines are classifying their mobility restrictions, we are kind of seesawing between GCQ and MCQ in almost 2 week intervals. And that likely poses some volatility that the investors aren't very welcome to.
Bea, now that GCQ is in swing again, so to speak, how does that affect your earnings outlook after, of course, having seen the first quarter performance?
Well, so far during with what we've seen in the first quarter releases, earnings have been generally in line with what we have expected since we already priced in how the pandemic will affect the company's profitability early on during the pandemic. We've also priced in to an extent how create law will affect the companies. But what's really important to look for here is how long the GCQ will be in place, since mobility is important in restarting the company's operations and for it to normalize, especially for essential sectors like retail and the likes.
Okay, let's talk about the banking sector. Of course, it's expected here that the recovery will take a while, and the interest rates that are at a record low will take some time. But it's been quite a while, diba? There's a lot of liquidity going on, and we were hoping that, of course, the lending would be picking up by now. But it's gonna take second half of the year, at least according to what we reported earlier on. How are you treating the banks now, especially since the first quarter earnings seem to be good for most of them? But you did mention that that's just in line with what you were expecting.
Well, stock price movement wise, a lot of the big banks are just trading at a range. But it still goes back to how volatile the pandemic is progressing, because consumer and business sentiment would take a while to recover, and it will hinge on how well we would be able to curb infections, especially now that vaccination programs are underway in several LGUs. So if that is sustained, then the country would be able to achieve herd immunity by, as what the reports say, second half of the year. Then it would likely return the confidence in lending and start boosting the bank's core businesses as well. Because what we've seen since the start of the pandemic and up until now, actually, is that the core business has been um, quite a challenge right now because of the low demand in lending, despite the low interests as well. And most of the bank's profitability hinges on non-core businesses like trading gains, which is very opportunistic in nature, and also how aggressive they've booked provision losses last year. Because then, as with what I've seen from other banks, they have actually substantially tapered their provision for soured loans, because they already did such a bullish job last year that some pressure on the bottom line has actually eased.
Okay, so can you say that they won't be booking any more of these big provision losses for the rest of 2021? They've actually already adequately put aside part of their profits for that.
Well, at least for the big banks that have a smaller exposure on retail banking, it is possible to say that provisions have already tapered down and maybe even returned to pre pandemic levels soon. But of course, the NPL formation is still there, especially for consumer lending, because of the expiration of the loan moratorium. So um, for the larger banks, yes, maybe it's possible that provisions have eased, but of course, you also have to watch out for how retail banks would proceed with their provisions.
Okay. Bea, let's talk about the airlines, particularly PAL, possibly mulling Chapter 11 over in the US, and they're already selling stuff. Does that bode well for the stock? Are investors going to celebrate this restructuring plan? Of course, it's bad news that it's bankruptcy, but at the same time, they might get some ease when it comes to the lessors and the debts that they do need to pay.
Well, in terms of PAL's profitability, it could be a positive news that the firm is filing for a Chapter 11 bankruptcy. But of course, the concrete steps haven't been laid out yet, and they haven't disclosed anything yet to the market. So given the volatility surrounding the market right now, it's possible that investors would likely wait for further details before moving.
Okay, and finally, Cebu Pacific. What's your take on that after that infusion from IFC and another investor? Has that been priced in, and will that significantly improve the profitability, even as, of course, the revenue side is the one with the issue here?
Well, for Cebu Pacific, what I've observed during their earnings releases since the beginning of the lockdown is that what's really performing well for them is their cargo business, because of because they have a relatively diversified platform. However, the cargo business only contributes less than 50% of Cebu Pacific's top line. So the the performance would still rely heavily on how passenger demand for air travel will come back. And then for the capital infusion, I think a it would alleviate the pressure from their cash burn and profitability in the short run. But of course, complete recovery still hinges on how passenger demand will recover and when.
Okay, so some relief there, but of course, still eyeing the reopening of travel. And finally, Bea, before we let you go, Mondenissen has finished book building on the 14th. They'll be listing in a couple of weeks. Tell us what price is interesting for you, and how is this going to perform in the trading day, in the first day of trade?
Well, they've priced in their IPO price at a relatively attractive attractive level since it's lower than its ceiling of more than 17 pesos. And what we're seeing in our end is that there is some demand, especially from retail investors, because they're likely looking for new investment opportunities, especially in consumer, now that we've seen that they are really quite stable even during a pandemic because they are essential. And based on what they've reported in their prospectus, they have good market share, which would likely be attractive for investors, and that they also have they're also trying to capitalize on the increased focus on healthy food like meat alternatives, which would likely drive their profit, which what they see is what will drive their profitability in the near term. As for how it will perform, what I've said earlier, the investors have been mostly waiting for towards the end of the trading day before aggressively coming in or exiting. So it will likely be the same for them too.
Okay, so they might swoop in, or they might start selling, depending on how the day progresses there, and of course the news during that listing day. Thank you so much for those insights, Bea Lopez of Regina Capital.
Thank you.
Okay, guys, I wanted to say a very quick update here before we move on to other headlines on the Miss Universe 2021 pageant. Our country's bet, Mateo, unfortunately has ended her run after finishing in the top 21, but we do congratulate her for all of her efforts. Meanwhile, let's take a quick peek at headlines. We're keeping our eyes on the national government's total debt service bill surged more than fivefold from a year ago to over 268 billion pesos in March. That is as principal payments spiked by almost 3,500% that month. Broken down, nearly 203 billion pesos was paid to domestic lenders in March 2021. Recall that the government did not settle any principal payments for its local debt in the same month of last year. Meanwhile, payments to foreign creditors grew 188% to almost 17.8 billion pesos. For the first quarter, the government's total service bill increased by 53% to 521 billion pesos. That figure accounted for over 40% of the 1.26 trillion peso debt service program for the entire year. The Institute of International Finance warned last week that debt service will likely become a greater burden for many emerging economies, including the Philippines, amid the high spending and low state revenues. Motorists traversing the North Luzon Expressway will have to pay higher toll fees starting tomorrow. The Toll Regulatory Board authorized NLEX to collect an additional 2 pesos for Class 1 vehicles, 3 pesos for Class 2 vehicles or buses and small trucks, and 4 pesos for Class 3. This means that from end to end or from Metro Manila to Mabalacat, Pampanga, Class 1 vehicles have to pay 6 pesos more. On the other hand, Class 2 and 3 vehicles will be charged an additional 14 and 16 pesos, respectively. The NLEX Corporation said the toll hike is part of the approved periodic adjustments due in 2012 and 2014. Now, the Senate Committee on Banks, Financial Institutions, and Currencies is seeking to give Congress the option to increase the assistance given to businesses affected by the pandemic. Committee Chairman Senator Win Gatchalian said that they will retain the initial 10 billion pesos under the guide bill because that is the available cash. But Gatchalian emphasized that legislators must be authorized to add more capital if necessary. The panel also wants to waive the transaction fees and documentary stamp tax for MSMEs seeking to borrow from government institutions, which is estimated at 20% of the total borrowing costs. Gatchalian reveals that the committee is hoping to sponsor the bill to the plenary session this week. And that's the first look into the business day. Today is Monday, May 17, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.